Hey everyone, my name's Andy. My channel is Finding Value. If you like making money, subscribe to the channel. Give me a thumbs up for the content. Leave comments below if you guys have any comments. I'm going to go over a commodities update today and show you what I see in the market. Again, I'm going to do more of a big overview picture and look at a whole bunch of different ETFs, look at the market conditions, because that is really what drives everything. Going into all these different companies, they're all exhibiting roughly the same patterns. So I think this will be a good indication of that sector using an ETF, and that's why I'm using it. So let's jump in here and look at a commodities update. So long-term update, and again, technical analysis, this is what we're doing today. Technical analysis can provide very accurate price predictions. Technical analysis is also about probability and likelihoods, not guarantees. If something works more often than not, even though it doesn't work all the time, it can still be very effective at generating profits. I just want to read that definition that someone had. So this is the 10-year Treasury notes. The yield is coming back up, and it looks like it's coming back up in this large pattern. So we're coming back to what I consider almost normalcy. We were at an abnormal COVID low down here. We're starting to come back up into what is more normal, and we potentially could bounce back and forth in this more normal range, given people are getting spooked given the rapid rate or rise of the yields. So it's going to take some time. We're going to see this kind of normal out and see these rates kind of, I think, normalize, not go up as fast. So I think we're coming back more into a range that's more of a normal range, and everybody's just adjusting to it. This is the US dollar. Again, we broke this large uptrend, and we are heading higher on the short term. I do expect some short-term pain. I think the dollar is going to increase for a little bit, and I do think the charts are going to pull back a little more. That's what I'm seeing. Doesn't mean that we can't turn around and reverse this quickly. We obviously could. But right now, the momentum's to the upside for the dollar, and the dollar is going to put pressure on the majority of the commodities that we own. So I'm going to go to some commodity prices here. This is the price of gold. The cup and handle pattern is still intact. There's nothing broken on it from a long-term perspective. So we shouldn't be worrying. We should be looking at opportunities and saving up for cost averaging opportunities. That's my view. And this is oil. If you look at it from a very large perspective, this is the price of oil. We're still in this very large pattern, kind of going down. We haven't broken to the upside. That's about a $70 price range. If we break the $70 price range, I think we're going to see this thing really start to move to the upside. But we're still in this channel, and it's going to take some time. Copper broke out to the upside. So this one's a clear break. It is kind of chilling out right now. But as far as I can tell from a long-term perspective, we've moved up quite a bit off this bottom. We went from $2 to $4 very quickly. Almost like this 2009 bottom coming on up. So this is partly the sell-off from COVID. So I think we were kind of more in the mid $2 range before COVID, and then it sold off and bounced back very quickly. I would give it some time. I do think it's recovering a little bit, but it may need some more time. So let's be patient. This is platinum. Platinum broke its long-term downtrend line. It's between these two, we'll call support and resistance lines. This would be a resistance line. This would be a support line now. And we're probably going to move around in here for a little bit, for a little while longer. And this is GDXJ. You can see the pattern it's scribed out here. We're still in this pattern. We're still pulling on back. Perhaps we pull back a little bit more. But with the dollar going up, some of these are not directly correlated with the dollar, but having the dollar increase is not going to help them, commodities in general. So we're still waiting to see a reversal in the dollar. And I think when we see that reversal, I think some of these will we'll do okay. But right now, we're still just kind of moving sideways within these patterns, waiting for a break to the upside. And I think it's going to take a little bit, given the downward trend and how far we are from the top of this pattern. So give it some time. SILJ, same thing. We're right there at the top of this pattern. We're kind of coming on down. Maybe we come back and touch this trend line here. So give it some time. Be patient. And these things, if you look, it seems like they kind of go sideways or down a little bit for a while, and then they just rocket launch higher, like just massive launches when they do move. SIL, same thing. It looks like we broke out of this pattern here to the upside, and we're just moving on sideways. Maybe we come all the way back down here and do a little back test. Very possible. This is North Shore Global Uranium Mining. Maybe we come back and kind of back test a little bit. It does look like we're contracting a little bit. The opening and closing prices are contracting a little bit. So maybe we kind of just go sideways here a little bit. That's what I'm looking for. I want a contraction. I want the buyers to equal the sellers. And if it doesn't, if we pull on back, maybe we come all the way back here and back test or something like that, which would be a fantastic buying opportunity if it does. This is global copper. You can see it's resting on its support line from this guy here. So we cleared all through this, broke up, and then we're kind of back testing here. So we do have some support right there. So that's good for global X copper miners. This is XLE, the energy select sector. Again, we hit our head on this guy. It's probably going to relax a little bit before moving on up. We're hitting a lot of these support. We either have broken through very large resistance lines, which are now support lines, and it's resting, or we're resting right below large chart pattern breakouts, or we're right kind of below, like this one, below breaking back into a chart pattern. Because the COVID sell-off absolutely hammered this stock, and this was a great opportunity to pick some very cheap shares up. And then we've got REMX. This guy hit its head on its resistance line here. Boom, hit it, and then it's kind of coming back. Probably going to need a little bit of time to recover from hitting its head on that resistance line. A lot of sellers there. So we just got to relax, be patient, find a good opportunity and some good companies to buy because I think it is a very good opportunity for a long-term hold. And this is the S&P Home Builders ETF. This thing broke its, people always ask me about the moratorium. And COVID shut down the economy for 2 months. It blew this thing to the downside, but it came right back up into the chart pattern and now is breaking the upside of the chart pattern because we have a structural deficit in real estate. And this is why the home builders are moving to the upside of this pattern. It is structural in nature. You can't progress society forward and have not enough homes and have not enough energy and not enough copper. You can't do it. So I know a lot of people that get worried about a stock market crash. It's going to be temporary if we have one. These are structural problems, and structural problems resolve themselves with higher prices and more of whatever that problem is, more production of that problem thing. Whether it be homes, whether it be copper, whether it be nickel, whether it be oil, whether it be uranium, doesn't matter what it is. These are structural problems. They're not going to be resolved, or they're not going to be held down infinitely, forever, because we have a problem like the home problem or something like that. We have to build these things. We have to do it if people want to be wealthier, if we want to progress society forward and the human race forward. So my take on it is whatever does happen, it's going to be short-lived, and it's going to be an opportunity to accumulate shares because of the structural deficit in whatever commodity it is. The ones that I shared today, I think that we're going to have to progress those things forward. We're going to need more oil in order to build renewable energy. We're going to need more copper. We're going to need more nickel. We're going to need more uranium. We're going to need all of these things to progress our wealth forward and to progress society forward. and to sustain more greater ever, population growth. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. Don't know what you're waiting for. Let me know what your guys' opinion is. Put it in the comment section. Love to hear your guys' opinion. And thank you for listening. This is Finding Value.